Welcome back to my YouTube channel. So today, guys, I'll be talking about market structure. Market structure is just basically how the forex market is organized. All right. As a forex trader, you need to understand how the forex market is moving. So it just shows you basically how the market moves. All right. So we all know that the market moves in three form: one, uptrend, downtrend, and consolidation. So we have the uptrend. The market moves uptrend, downtrend, and we have consolidation or sideways. All right, we have consolidation or sideways trend. So one of the ways for you to know that the market, to know the structure of the market, is to identify the trend. So when you identify the trend that okay, the market is moving up, then you know what uptrend market structure is. So first of all, for an uptrend, so for a bullish market structure, the market forms higher highs and higher lows. All right, higher lows. So take note of that. The market forms higher highs and higher lows for a bullish market structure, while for a bearish market structure, the market forms for a bearish market structure, the market forms lower highs, lower highs, lower lows. Okay, so we have that. All right, we have lower highs, lower lows for bullish market structure, higher highs, higher lows. So when we say higher highs, higher lows, what do we mean? So what we're basically saying, we're saying when the market is moving up, we see the market moves this way, comes down, creating a high there, comes down, formed a low. Then this high is taken by a new, there's a break of this high. So basically, when the market is on an uptrend, it forms series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. All right. So it forms series of higher highs, higher lows, higher lows, higher lows, higher lows. All right. So you need to understand this. Okay, until there's a shift in market structure, bearish, when the market now starts taking out the lows, taking out the lows, taking out the lows. If you notice, the market was taking out the highs, uptrend. All right, market was taking out the highs, uptrend. Was taking out the highs, taking out the highs, taking out the highs until this point where it took out the low. Refuse, failure swing. All right, failure swing. Then it refused to take out that high, now forming lower high, lower low, lower high, lower low, lower high, then lower low. Then you need to understand that the market moves where you want to look at your market structure. You need to go to the daily time frame, because at the higher time frame, that's where you see clear structure. All right. So, for example, let's go to the daily time frame. Let me just show you how to mark out structure. All right, how to mark out structure. So, okay, let's just use from here now. You see, so basically, you see that the market was forming series of higher low, higher high until this point. Thereby there was a failure swing, refusal to, that's the market refused to break out that high, and we started seeing this downtrend. All right, so you can see that the market kept on taking out the lows until this point again, where the market came here and failed to take out that high, that low, and went up again. All right, so this is how you mark out market structure. So you need to go to your chart to note these things. All right, and also note that for, because for, okay, let's take note that of that. For candle wicks, we use candle wicks to mark structure. Candle wicks, candle wicks for candle wicks for structure. All right, use candle wick for structure, and we use candle body, candle body for BMS slash SMS. All right, so we use candle candle wicks for structure, and we use candle body for BMS. When we say BMS, is when the market basically breaks out the previous high by a candle close. All right, so for example, we'll see this close above this candle. When the market took out that high, this is BMS. Another one, we had another one here again. We had another one here again. Took out the candle close above the high, just like that, just like that, just like that. So you have to understand that is candle close. Why for market structure, if you look at this structure we marked out, we are using the wick of the candle, the wick of the candle, the wick of the candle, the wick of the candle. All right, guys. If you haven't subscribed, please subscribe to my YouTube channel. I'll be dropping more updates on the forex market, more educational content, whereby you learn how to analyze the market well and know how to mark out these things on your chart basically. Okay, so a recap, we said market structure is one of the basics of forex trading. You need to understand how the market moves, and also you need to know that bullish market structure consists of higher highs, higher lows. Bearish market structure consists of lower highs, lower lows. Then for candle wick, we use candle wicks to identify structure. We use candle body to identify break of structure. All right. So go to your chart and mark out these things and learn these things. Thanks, guys, for watching. God bless you.